Are you ready to take your first steps towards financial freedom by investing in property? Maybe you've started your portfolio but need some help continuing to grow. Lachlan Vidler and the team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take advantage of some of the best investing conditions in almost 20 years. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment and set you on your path to financial freedom. Book in your free discovery call today at atlaspropertygroup.com.au.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone. It's Grace Ormsby here. Welcome to a brand new episode of the Smart Property Investment Show. And this show is all about talking to people who are walking the walk, dealing in property, buying and selling property, real estate, looking at what's going on at the moment. Obviously, it is an absolute favourite of ours when we get to chat with people who are building out their property investment portfolios, because the wins, the losses, any mistakes that they've made are just really so helpful for anyone else who is listening along to build out their own property portfolio themselves, to know what to do. We're a community here and we want to make sure that we keep doing that through 2022. And it makes me so excited that today I will be talking with an investor who is actually Sutherland based at the moment and a rentvestor, but we're going to get to that in a little bit because I've got him on the line right now. Adrian Player, welcome to the show.
Thanks so much for having me, Grace.
Adrian, obviously I've just given you the intro of being Sutherland based and a rentvestor, and we're going to get to that in a little while. And I know you've got a few properties at the moment and a bit more of a pipeline in the works. But before we do, what is it about property investment that really drew you in?
Property's always been a passion of mine. I've been in lending now for 12 or 13 years. So always on my spare time, I've been on realestate.com looking up stats, looking up cities and talking to a lot of my colleagues in the past. So it's just something I've always done on the side while I've been working.
And I don't know if you're comfortable with me giving away your age on here, so I won't do it. I'll leave that to you if you like to. But if you've been working in the industry for more than a decade, that's sort of a long time to be building up some knowledge of what you actually need to be doing in property investing. Is that how you sort of have seen it, have framed it?
Yeah, that's fine. I'm happy to share my age. I'm 34. So I'm one of the rare people that has started in lending and never stopped. So that's all I've ever really done. So I've managed to look at 3 consumer lending products and I've been around it my whole life. So, yeah, I've managed to see everything from about the GFC until now. And I haven't really been in the property game the whole time, but I managed to track it the majority of the way.
Yeah, because you sort of did jump into property as an investment vehicle not that long ago in the scheme of things. Was it 2022 that you bought that first one?
Yeah, so I was in property. I built a property in Helensburgh about 5 to 6 years ago, but due to a divorce and having to sell that off, it took me a couple more years to rebuild and start again. Okay,
well, talk us through, your most recent pursuit into property and that first property that you bought a couple of years back, because that feels like the beginning of your property investment journey at this point.
Oh, yeah, absolutely. So the end of 2020, we are rentvesting in Sydney. We were looking towards actually starting out and moving up to the Newcastle area to get out of Sydney. Because I work from home, I can pretty much work anywhere. So my wife and I, Maria, we looked at the Newcastle market everywhere between Newcastle and Maitland. And then we kind of sat in the middle of that around the Beresfield area, so anywhere within 3 suburbs of that. So we spent about 6 months tracking the market, negotiating, and that's where we got our first one in Woodbury.
Gosh, that market has gone pretty well recently, hasn't it, around that area? How much has it gained at this point?
I bought it for $440 and it's gone up about, say, 35%. So if you wanted to sell it on a good day at the moment, $620, $630 at the moment.
And are you planning on holding that long term?
Yeah, I'll hold that one for life. It was kind of a pick of the suburb that we really liked because there's a lot of housing commission in that suburb, but I've got family there. So we looked at every suburb around that and it was all priced at 100 to 150 grand more. So we bought the street furthest from the Housing Commission in the wrong direction where the train was. So no one has a reason to come up to our street. So it's the best street in that suburb. And that's really where we think we got a lot of the growth out of that one.
For sure. And so that was only not even really 2 years ago.
No, we're probably 12, 13 months now. So we settled it just before Christmas on 2020.
And then since then, you've bought a couple of properties since then already. You're being pretty aggressive with this strategy. Was that always the plan?
Yeah, well, as far as income goes, the household income is quite high for Maria and I. So we were always able to get up to about the fourth or fifth one pretty quick. But we've already pulled money out of Newcastle to fund one more deposit. And we're planning to do that at the end of next year as well, to hold 3 for a 12-month period and then pull money out for the next deposits.
So let's talk through now that second property purchase. Where was that and what is it?
So it's in the Ipswich area in Brisbane. So my wife and I, we've got a plan to actually rent best up in Brisbane. We're going to be moving to the Gold Coast area soon, just to be around family. So family's in Jimboomba and my parents are retiring at the top of the Gold Coast. So we all want to be close together. So then the second purchase was in Ipswich area in a suburb called Raceview. We really like that suburb because I've used a buyer's agent that's really honed in on some of the areas that we like. And with a lot of the flood concerns and mining concerns in that area and a lot of house and land packages on the fringes, we wanted something that was close to amenities, large block. But yeah, it kind of at a very good affordable price that we could get in. So we got in for $388 there and we got quite a good rental yield, plus the ability to put a 1-bedroom granny flat on the back for 50 square metres as well when we want to.
Okay, and granny flats are obviously, big business at the moment and becoming a really popular option for people to increase that rental yield. On that strategy again, and you've obviously for that Newcastle property gone for buy and hold. Is that what it's going to be for every property that you do purchase?
Yeah, so I've mapped out a plan of about 5 to 7 years to get my wife's end goal property while we try and start a family and have some children. So that's kind of the time frame that we're on. So I'll keep buying for probably 3 to 3.5 years until I max myself out. And then once I'm maxed out on the consolidation phase, I'll put a granny flat on every one of them and then use that as the cash cow to, 1, get into the main residence that we want, and then 2, to support the next level of buying that we want.
Sounds like you've got it all figured out, Adrian. How did you actually put together that kind of strategy? Because obviously there is an end goal in mind for all this. Was it a case of working backwards?
I think over time I would have had a different response 2 to 3 years ago when I was initially building my business. But now we're at a point where my wife and I have sat down for pretty much a 12-month period talking nonstop about what is the plan to get us to where we want. And then, like you said, we reverse engineered it from there. So a lot of people don't like granny flats in the investing community, I'll be honest with you, especially buyer's agents. They'd much rather you buy 2 or 3 and continue pulling equity out and getting the next one. But let's just say that I'm a bit more conservative. I do want that cash flow when my debt level is high, and I don't want to be buying 20 or 30 properties. I'd rather have 10 good ones with granny flats on the back with 20 tenants.
Some good insight there. Talk us through that dream property, because I'm actually very curious. What is that end goal of what that property is going to look like? Where's it going to be? Do you have all that, worked out to a T, or is it a bit floating? You're not really sure what it will look like yet.
It'll be one of these two, and it's very opposite. My wife wants something on a canal waterfront with a nice pool, 4 or 5 bedroom, really big. Me, I love a compound in the middle of nowhere with a whole lot of land and a house that's 5 times the size of a normal house. I'd love something like that.
Okay, cool. Well, you've got options and you're clearly on the right path with all of that, Adrian. We're going to take a quick break, but we'll be back soon to hear more about Adrian's property portfolio.
Looking for a blue chip Gold Coast investment property, or trying to relocate to the beautiful sunny Gold Coast but keep missing out on the right properties? Maybe you need an expert on the ground to source the right property for you. The Srama Group are the leading recommended buyers agency specific to the Gold Coast, providing their clients with exclusive off-market property opportunities, specific insights into market, combined with a large network of dedicated professionals to ensure you make the right decision without the hassle. Get in touch with us at thesramagroup.com.au and secure your financial freedom today.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Adrian Player, currently rent vesting in Sutherland, but plans to move to Queensland. When will that happen?
Sometime in the next 6 to 12 months. We'd like to start the family first and then try and find a rental up anywhere around the Bargara Waters area. We'd like that. But also we've got to line that up with maximising my wife's income this last 12 months. So we'd like the fourth and fifth purchase to happen before we actually move up.
And we'll get to, the rest of that portfolio in a second. But before I do, I want to pull up on something that you mentioned a bit earlier about working from home. Has that, obviously in the lending space, you probably have had a bit of flexibility for a while now, but has COVID really changed the game when it comes to working from home for you, do you think?
As far as I'm concerned, no. The last kind of 3 to 4 years, self-employed, 3/4 of it I've been out of home. But I am seeing the market it's changing. There's at least 10 to 20 to 30% of jobs now. And you're seeing, what happened to my Newcastle property with people bringing their big Sydney incomes and then living in a more affordable area. So I don't think that's going to change. I think that's going to continue. And there's also a whole lot of migration coming out of the southern states into the northern states at the moment. So it hasn't really impacted me because I've been doing it for so long. COVID, I'd like to say, hasn't really changed my life when it's impacted a lot of others. And I guess the lending space, everyone's sitting at home looking at their expenses. So it's been a situation where the lending markets have boomed in the last kind of 18 months.
Definitely a great position for you to be in, Adrian. Just curious, does it change the locations that you're maybe looking at when you are doing your property investment yourself?
Yes, absolutely. So it used to be a whole lot of Sydney, Wollongong and Newcastle. Now it's very much, I'm looking at CBDs, so mainly Brisbane, Adelaide and Perth at the moment. Anything within kind of 40 kilometres of CBD I like looking at the moment.
Interesting. Well, let's get on to the next part of your property portfolio, that third property. So the second one was in Queensland. I do believe that you bought the third one in Queensland as well.
Yeah, so we used a buyer's agent again for the third one. That was purchased within 2.5 weeks of the second one. So We already had the income there, and it took us a while to figure out what we wanted to do. And once we figured that out, we shot the bullet twice. So the third one's in Bethania in the south of Brisbane. And we really liked the access to the highway there. We liked the train lines close. There are quite a few big Bunnings facilities, and I really like big store formats like that because I used to work in Bunnings, so they actually do a lot of economic data, and they don't put a Bunnings into an area unless it has like a 20 to 25-year growth trajectory, and they never put one Bunnings closer to another Bunnings. So I really like those kind of formats and seeing little things like that and how that can impact your property.
That is actually such an important point. Like, I've never really thought of it before, but it's almost like the Bunnings factor or the Bunnings effect where they are looking at all those figures. They probably do know more than you or I or the average person about what's going on for more the long term in particular areas. But that's really cool that you know that from working there.
Yeah, and from my point of view, some people don't like the south of Brisbane, but I love it. It's the north has run already. You can't really get much within 30 Ks, less than 600,000 at the moment. But the south, you can still get 350 to 450 on big blocks with granny flat potential. And really, I'm just playing the Sydney game in Brisbane. I think we're in the 1995 to 2000 market in Sydney when no one liked Penrith, no one liked Mount Druitt, no one liked Campbelltown. But if we blink in 15 years' time, I think we'll be looking at Brisbane very differently.
Absolutely. Talk us through, Adrian, your use of buyer's agents. Did you use the same one for both of those purchases?
So Mark Navin is my buyer's agent. So Mark Navin, Y Property. I've loved him from the start. He's the guy that wears the broad billed hat, doing selfie videos for the last 5 years, walking down streets, talking about things that half of the buyer's agents don't talk about. I've watched his deal flow for the last 5 years, built up a relationship with him. So there was only really him and one other that I trusted at that time. And the deals that he's found for me, even the ones that I haven't bought, all had some form of, off-market potential with built-in equity and under-market value, which I really liked. And really, I'm time poor. I'm busy. Mark's done everything for me, and I really owe him a lot, and he'll be buying all my Brisbane properties.
Pretty much answered my next question there, Adrian, which was around, why you thought it was worthwhile to be going through a buyer's agent. And was it, just that time poor and knowing you wanted to pull the trigger then and there?
Yeah, absolutely. So I didn't have to get in any long-winded bidders up against 4 or 5 bidders. Nothing was done at auction. It was all done off market. He saved me $5,500 on a builder's report just because it was raining a lot during that week, which was amazing. So half of his fees already paid for. And the fact that he's got connections with the granny flat builders really gave me, I guess, confidence to buy the blocks that I have, so then I can put the granny flats on later.
And I know you've got plans for the 4th and the 5th in the works, but at this point in time, can you just give us a snapshot of what your portfolio is actually doing?
So right now we're sitting at around 1.4 to 1.5 mil total value. The first purchase I did in Newcastle was run on a 20% deposit, and then the second 2 were run on 10% deposit. Okay.
And is it cash flow positive, negative? What's the situation with all that?
We're pretty neutral at the moment. So the rental yields are coming in at Newcastle's 475 on a 400 mortgage at the moment. Raceview's 400 on a 350 mortgage, so just over neutral. And then Bethania's 390 on a 350K mortgage. So we're doing pretty well there without the granny flats.
Absolutely. And all those markets are still going to grow in the next few years. That's got to be reassuring when you are looking at, purchasing more properties down the track.
Yeah, and on the Bethania property, I had a problem with a really low rental yield. It was at 340. And with Mark's help and his wife's help, who's my property manager, we managed to negotiate a rent increase maximum to 390 before I signed, because I saw that as a risk. The lease was coming up a month after I'd signed, just before settlement, and I didn't have control over it. So they really helped me decrease the risk for that purchase.
That's pretty huge, a $50 jump. And I'm assuming, given how much the Queensland market could still actually be growing, there's so much more potential in the longer term there. Are you hoping that that rent does continue to, just step up over the years for both of those Queensland properties?
So Bethania, I wanted to be at 410 or 420 just because there wasn't that many rentals in that market. But I was capped on the maximum that I could put it up over one session. And the other ones are 4 better with 2 living rooms in Raceview. So it's quite a larger property, and it's quite close to where the shops are. So the amenities are really good there as well. So I see the rental yields going up at least say $15 to $20 every rental period.
Good on you. So, Adrian, what's next? What's that 4th property going to look like?
We've already lined up that. So being a mortgage broker, I can forward plan my income probably 2 months in advance. So I already know that the income's going to be there by late February, early March. So again, I'm going to be looking in the south of Brisbane market, hopefully another suburb, not one that I've already bought in. But the closer I can get to kind of a CBD environment, the better. So maybe a Slacks Creek or a Woodridge, and half the people don't like it because of demographics, but they're really focusing on that because they're looking at the next 2 years instead of the next 20. So I'd rather buy in now and potentially have a couple of hard years or bad renters, but as soon as that yield goes over a certain amount, they all move out.
Yeah, interesting thoughts there. So what's the kind of specs on a property that you are looking for around there?
I guess the whole strategy from the start has been kind of 30 to 40 kilometres from CBD, entry level, so 3 bed, 1 bath, 1 car, anything over 650 on flat lots with side access. So as long as the granny flat builder says yes, that's really what I'm looking for. And look, I know going down this strategy, I'll have quite a bit of land tax, which is why if I'm making more than kind of 5 purchases in the one city, I do want the granny flats, which is obviously going to help pay the land tax bill over the years.
Yeah. Touching more on that granny flat topic, when are you expecting to build on some of those blocks of land already? You know, is it something that's going to happen immediately, or are you like, we can do that down the track?
It's going to be done in sections when I'm maxed out on each tax return because I'm self-employed. So it will be done at the end of 5 if I want to, or I lodge my tax return, take the tax hit, and then continue buying. Or it'll be done at my next tax return will get me to about 8, maybe 9, and then I'll start going to the mid-tier lenders. So it might be done at that or around kind of 11 to 12 properties. So there's kind of 3 sections in the journey where I could go into consolidation phase if I wanted to. And I think that's going to be a little bit flexible based on market conditions, and if I ever see a period where there's a lot of uncertainty and something changes with my job, we have triplets or anything that's untoward, I'd love to put the granny flats on and just create that cash flow which enables us to get through.
Do you have a history of triplets running in the family?
Yeah. I'm an identical twin.
Okay, so it could happen.
And there's 3 sets of twins in our direct family. So, yes.
So that is something that you really need to be preparing for. And you obviously are, to be thinking about all of that stuff. That's pretty crazy. That's cool very cool that you're a twin. What comes next then? After that, is it going to be the tax hit after that next property, or is there going to be another property in the meantime?
So the 5th one will be around that July, August, September mark, depending on how the business goes. And then the next question, I already know I'm maxed out on this current tax return. So the next question becomes, when do I revalue the properties that I've held for that 12-month period, pull the deposits out, and when do I want to take the tax hit? And do I want that tax hit come out of my money or the top-up money from one of the mortgages?
I like that you're talking about taking the tax hit, because I do feel like it's something that a lot of property investors are really scared to do. You know, does it feel like you're doing it something a little bit different to be just, you know, upfront going, yeah, I'm going to have to pay this extra? Or is it coming from your lending background and really knowing what's going on in that space? Or can you just talk us through that a little bit more?
Yeah. So I've been in lending for a very long time. So there was a little bit of accounting in my background as well, so that helps. But having a good idea on what's coming in on a BAS basis quarterly gives you a good idea on what the tax hit will be at the end of the year. So you've always got to keep between, say, 40 to 60,000 in my specific space as cash at the end. And really, you've got a period of July to about August, July to March, where you can take the tax hit and lodge the tax return. But then that tax return increases your borrowing power, which enables me to buy more. I've just got to sync it up on the timeline that I want, and I just don't want any periods of stalling. I want more control over when I do it.
Yeah. And a lot of people just wouldn't even want to be paying any tax on their properties. But why do you see this as a good way to be actually, you know, looking at your portfolio? Because it feels like a very long-term play.
Yeah, and really I've done depreciation schedules on Newcastle. Raceview will give me a little bit of depreciation, and so will Bethania, but I'm not doing this on a basis of I want to decrease my income and not take a tax hit, because from my point of view, that will limit my borrowing power. So there's at least a 3 to 4 year period where I want my income to be as high as possible. I mean, sure, from a business standpoint, I want to claim as much as I want. But then there's that 20% period where maybe I don't want to claim that 20% amount extra because I want my borrowing power to be high enough. So you've got to balance that again.
Some very good food for thought there, I think, for our listeners to take away from this episode. We'll be right back with more from Adrian Player.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
Welcome back to this episode of the Smart Property Investment Show. I'm joined by Adrian Player. 3 properties under your belt now, Adrian, but you've got plans to get a fair few more pretty quickly. You are being pretty aggressive in the investment space. I think now we've talked up to, what you're going to be doing for up to 5 properties, but what's sort of the plan post that? So what are you looking at, 3 to 5 years down the track? Where are you hoping to be?
I do want around 5, 6 or 7 properties in the Brisbane market because I think there's a lot of growth there long term. And then I do want to have maybe 1 or 2 in your Perth and your Adelaide markets. So I do want to spread the risk between states and maybe a little bit of Launceston. I've been looking at some suburbs like Ravenswood, which is very close. So I think having a good little split, because you never know which state is going to boom and which city is going to boom at that period. So if you have it spread out, that's going to help. I think you can still get good yields in those markets as well, which is good. And then what's essentially going to happen after kind of the 3 to 5 year period is really I'm deciding on when I want to put the granny flats on. So that's the main thing. And then really open discussion with my wife on where the family's at and when we want to timeline that purchase that we want to make. So, yes, there will be a timeline where I think we're going to have to pay for maybe a $1 to $2 million property, mostly in cash or equity out of the portfolio, which is good. And there might be a period of time where I'll need those granny flats as a cash flow mechanism to, support that level of debt on an owner-occupied property.
Yeah. And I think it's really cool. You are planning all these properties are holding for the long term. There's nothing that you're really buying for quick capital gains.
No, I'm not looking at a 3 or 5 year period. I'm looking at a 20 to 30 year period.
Yeah.
The goal is to never sell. Obviously, things change, but I think cash flow enables you to weather a lot of storms where, like you said, I am going particularly hard now, but the income is coming in now, which helps as far as work goes. But I think when you're building out large portfolios, people don't see that cash flow as a buffer to a lot of things that happen in life.
So let's skip forward again, 10 years down the track. Are you still sort of planning to be, working in your own business as much as you are, or is there going to be any kind of switch over to property as a bit of an income stream for you?
Yeah, so that was kind of the main decision on why I'm doing what I'm doing. So I don't want 20, 30 or 40 properties with very large kind of asset bases with not a lot of cash flow. I'd rather come out the other side with, 3 to 500 grand worth of income from 10 properties with granny flats on it, 20 renters, and then use that as a mechanism to see what I want to do. So, look, I'm in the lending space. I might want to start a buyer's agency on the side, use, what I'm doing now. I might want to buy out an accountancy firm and create referral networks that way. I don't think I'm ever going to stop in the lending space because I've done it for 12 or 13 years. So I don't think any changes are going to happen there anytime soon, but this may enable me to branch into other areas.
It does sound like the world is your oyster at the moment, Adrian, just by the sounds of it, and hopefully you do agree, all of this is just providing you with so many opportunities for the future that you do get to choose when the time comes. Is that fair to say?
Yeah, that's all I want. All I want is the choice. I don't want to retire. I don't want this massive asset base that, some people want to go down this route and own the 30 and then become a property manager of the 30. I don't want to do that. So, yeah, this is just a way to give my wife and I choice. Look, if I'll be honest, I don't think I'm ever going to stop buying, and I've already warned my wife. And she knows. So might just, after that kind of 7-year period, we might just go a little bit slower, 1 or 2 properties a year for the rest of my life. But I don't think I'm ever going to slow up.
I'm sure if she has her property on a canal, she won't mind.
Yeah, that's true. Very true.
Adrian, it sounds like, you've got everything sorted out in your head. You know exactly what you're doing with all of this, even if the specifics aren't quite there, because that's going to, come as you go. But, have you made any mistakes, or has there been anything that you've gone, maybe I shouldn't have done that? Because it all sounds like it's all worked so well for you, and which probably does come back to the fact that you did spend so much time sort of in this space before you dove in yourself. But I'm sure the listeners are wondering too, have you done anything that you've regretted?
Oh, yeah. So my Helensburgh property I bought in the 2016, end of 2015 market. So it was one house on a corner with 3 blocks at the side, and I bought one of those blocks, and that's where I learned how to do construction and buying land and when a land registers. So I didn't know that it was going to take 11 months to register. I didn't know that the 3 metres elevation increase over the build site would increase my build by, $170,000. I came in thinking I could get it done for $170, ended up costing me, say, $320, $330, not including driveway and flooring. It was a kind of split level design with bearings and joists. So garage and front room, stairs and everything on the top level. So I learned a lot as far as construction goes, costs. Halfway through the build, we had to move 110 metric tons of dirt off my block, and it wasn't in the contract. So it cost me $8,500 hit while I'm dealing with a budget that's inflated most likely by 80% of what I originally thought. So yes, that was a big hit starting out. And other than that, I've just watched everyone else make mistakes. I'll be honest with you.
I guess best way to do it, really. But it does sound like it was a really good learning curve for you. How vital was having an experience like that to what you've been doing since?
Oh, yeah, absolutely. We came out the other side, sold it 2.5 years later at the top in 2018, 2019 start, and made a very good profit on it. So even with those inflated prices and all the mistakes, we still made a good amount of profit out of that property, which was amazing. But as far as would I build again? Yes, I would. I am crazy that way. But yeah, I think if you keep on learning with choices that you make in life, you'll start getting better at the choices. And I'm all about mitigating risk. My whole job is to figure out when something goes wrong, how to fix it. So that's how I work with my life as well.
Definitely a good approach to have. I mean, it just sounds like you've got everything happening so quickly. How do you actually, take the time to be doing that, to be doing your job as well? You've got a wife as well. You need to be with your family as well. You're obviously moving up to Queensland. How does everything actually work in with your life? How much time do you think you need to be dedicating to property investing?
I think when it becomes a part of your life, it's easy. So there's not one topic that I don't discuss with my wife, Maria. So she's got an accounting background. She may not have the level of knowledge that I've got, but I operate my life on the presumption that if something happens to me, Maria has to be able to manage everything and understand everything. And I'll be honest with you, she gives me different perspectives, and she's a kind of that brake mechanism that tells me to stop and then change or assess. So, there's not one thing we don't do. At least 1 to 2 hours a night, or I've been doing for the last 5 years. I'll be on the computer, or I'll be on YouTube videos. I'll be researching data because I love deep diving into things. That's just what I do. And Maria, she slaps me a couple of times, but she knows that that's something that I'm interested in. So I'm the guy that does 10 to 20 hours a week for the last 5 years, and it's never stopped.
So what's that? What do you love looking at when you're looking at that research? What are some of the indicators that you kind of rely on to make your own decisions?
I really like what I did in the Woodbury market. I love outlier suburbs with everything around it being priced higher. And I love the idea of demographics and gentrification over time. So I'll give you a couple of examples. I watched the Corrimal market and the Bellambi market in Wollongong, big housing commission suburbs on the water, went from 400,000 to 600,000, and then everyone opened their eyes and suddenly it's $1 million suburb inside of 5 to 7 years. So I love that. I looked at the Ravenswood suburb in Launceston, and I see everything else priced around 400 to 450 when you can get something 240 to 280 there with a 7% rental yield. So I do love that. And I do like seeing kind of owner-occupied investor spread and some websites that give me some stats. But at the end of the day, I kind of educate myself to a level to say yes or no, and then I use someone else that knows even more than me, like Mark, and he just goes out, and obviously I've got the level of education to say yes or no based on what he presents me.
Adrian, it's been wonderful to chat with you today. Some really, really great insight that I think our listeners will definitely, be writing down the Bunnings thing and looking up at Brisbane. But you're clearly doing everything the right way. And I want to wish you the best of luck for those next couple of years. And I don't know, maybe triplets will be in the mix of all that.
Fingers crossed. I won't say no.
Well, Adrian, please keep us updated with what you're doing, especially with those upcoming property purchases. We'll definitely love to hear about it. We'll have to do a catch-up episode down the track.
Oh, that's great. Thanks for having me, Grace.
Thank you. To everyone who is listening at home, we hope you enjoyed this episode. Please like or review us on whatever podcast platform you are listening in on. If you have any questions for anyone here at Smart Property Investment Team, reach out at editor@smartpropertyinvestment.com.au. As always, stay up to date with our social media, Facebook, Twitter, LinkedIn, and on our website, smartpropertyinvestment.com.au for all the latest property investment news. Until next time, stay safe and well. Bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Looking to refinance your loan for a better rate? Maybe you're considering releasing equity to grow your portfolio or struggling to find a lender that can meet your needs. Finny is the investment finance specialist that has the solution. With access to over 70 lenders, Finny can track down the financing solution you need. We specialize in investment property finance, and we only deal with lenders that have the right solutions for investors just like you. So you're in safe hands. Fast-track your investment strategy today. Visit finny.com.au for more information.